be issued for every single session that you attend, because we're going to have multiple sessions, but we only have 3 different topics. So that means that we can only issue 3 different C credits if you decide to attend all the sessions for the week. If you attend for life insurance, that's 1 C credit, and 1 for investment, and then another 1 for living benefits. And that's because some of the topics are just repeating topics. And for compliance reason, we can only issue 1 of these C credits. And you must be registered when you attend. You must be attending for at least 45 minutes in order to get those C credits. They will be sent directly to your email address the following to your email the following week. So you don't have to send us your email address in the chat. Please do not send your email address. When you join the webinars, it usually asks you to enter information. If it's not asking you to enter information, maybe because you already entered that before. And please make sure to use your name when you join, not your mobile device name. At IE, we're really proud of the fact that you can get multiple coverages based on your client's need under one umbrella. And we have this, what we call IE one-stop shop. When you meet up with your clients, you have to do their needs analysis with them. You're not only meeting up with them just to sell life insurance, because it's not only about what's going to happen at time of death. It's also about, is the client covered should any other event happen in the life of this specific client? Who's your benefit? Who are your loved ones? Are they protected? Because in life, there could be accidents that can happen, always unexpectedly, critical illness that can also happen unexpectedly, but we want to make sure that the client is covered not only because they're going to die, but because they're going to leave. And it is because of their income that they can have the lifestyle that they have right now. And we also want to make sure that if critical illness happen, they have no financial worries and they can just focus on recovery. And that's why we have what we call living benefits product, because you can get the benefit while you're still living. The other type of products that we have are for clients who have maybe different projects. They want to save for their children's education in the future. They want to save for their retirement in the future. The best time to start is as soon as possible. And we have those type of products, and those are the savings and retirement plans. And that's why we have different teams, so that you have the right team that's specialized in that specific topic and that specific division that can assist you and give you the right information. Now with WFG and IE, we know that there is a lot of people that are coming to Canada. It's a very diverse community, and we want to make sure that we can offer our product to as many people as possible, many families as possible, that they're all protected. So at IE, we are trying to do our best to, yes, get your feedback and make sure that we can offer them something that can meet their needs. And if they cannot qualify for a specific product that they wanted initially, we can get something else to the table so we can have a different option for them. So for work permit holders, we can talk about life insurance fully underwritten. If they want those type of products, they have no specific maximum as long as it makes sense financially. Now, if they want to have critical illness product, it's typically $100,000, up to $100,000, but they have the possibility to get a higher amount depending on their situation. So that could be based on their occupation, or maybe based on the KSAP number they have on their work permit, but it could be on a case-by-case basis. We can potentially give them a higher amount for critical illness product. Now for student permit holders, and this is why I say we listen to your feedbacks. And we got a really high demand about student permit holders in Canada when they have been here for less than 3 years. We understand that sometimes it could be very limited. We used to only give them up to $100,000 for EVO. So that's in terms of fully underwritten life insurance product. Now, and thank you for your feedback again, we are able to give them up to $250,000 through EVO. So when I say through EVO, I'm talking about a fully underwritten life insurance. If they want a higher amount than $250,000, We can always try Access Life. That's if the client is open to getting a simplified issue version of our product, where they can potentially get up to $500,000. But because this is a simplified issue life insurance, remember they have to answer the questions first in order to see how much they can actually qualify for and what's going to be the rate. In terms of critical illness product, because this one has a more stringent underwriting guideline, we cannot give them a fully underwritten critical illness because they have been in Canada on a student permit for less than 3 years. But we can always try to give them Cancer Guard, which is an option when the client has been in Canada for at least 12 consecutive months. That's available through Assurango. And that's actually the simplified issue cancer/CI product that we have. If the client has been here for longer than 3 years and on a student permit, there's no specific maximum for life insurance, and they can have any amount as long as it makes sense financially in terms of life insurance product. For CI product, it's up to $100,000. For conventional refugees, same guideline, no specific maximum for life insurance as long as it makes sense financially, and up to $100,000 for critical illness product. Visitors, most status in Canada, and this is something that I like about IA, is the fact that even visitors, they can have a protection with us. And I'm not talking about just a simplified issue product that visitors can have. I'm talking about a fully underwritten life insurance. But that's up to $100,000, provided that they have no intention of living outside North America for more than 9 weeks over the next 2 years. So it all depends on the client's intention. And if the client wants a higher amount, we always have Access Life that's actually available not only on Assurango, but also on Evo. And you just decide which platform you're more comfortable with, you prefer, because the product is the same product. The only difference could be in terms of riders, but if you just want the life insurance Access Life, it's available on both platforms, Assurango and Evo. For critical illness product, we can't give them Cancer Guard. We can't give them Cancer Guard unless they have been in Canada for 12 consecutive months, and they can get that product up to $100,000. And I think this one could be great coverage for visitors, not on a short-term visa, but maybe on a super visa. It could be possible that they have been here for at least 12 consecutive months. So they can try applying for Cancer Guard if they need those type of coverages. So you can tell that when the client cannot get a specific product solution with us, we always try to come up with another solution, because at IU, we really believe in the fact that every family member deserves a coverage, even children, when they have a specific condition, and they tend to be declined with so many other insurance companies out there. With us, and not specifically with Access Life, even children can have protection. So we talked a lot about Evo, and I'm pretty sure if you've done business with IA in the past, you probably used this platform, which is a really great, amazing sales tools. Not only a sales tools, actually, you can now do electronic changes as well on Evo. But it has been the advisor's choice in terms of electronic application tools. It's a great platform that you can use when you want to give a client a great sales experience, and not only for the clients, but also for you, because you're an advisor and you have your compensation. You can get paid as quick as possible because of Evo. That's because this platform is very intuitive and very simple, easy to use, that it allows so many clients to be approved at point of sales. That has been the case for over 60% of the applications that were submitted. That can also be possible when your client is applying for up to $2 million of coverage for life insurance, and the client is at age 50 and younger. There could be some scenarios, some situation where your client says that they're healthy and they don't get why they need medicals. Please remember, the questions asked in Evo are not only medical questions, it could be non-medical questions. So it depends on the type of information they enter or they're disclosing. Sometimes medical can still be required, even if the client is at age 30, which is younger than 50 years old, and applying for maybe $1 million coverage only, and that can happen. So that could be possible. So we're not saying that everyone's going to be approved at point of sales. We're just saying that it is possible, but it is possible, and it happens for over 60% of the applications that we will receive. So that means that those applications didn't even need an underwriter to look at that file. It's very intuitive. The questions in the declaration of insurabilities are very detailed. When you enter any information, it just pre-populates the next questions as well as the requirements for you based on what you have entered. So you might find some clients are not approved at point of sales, as I mentioned earlier. Sometimes it can be auto-approved right at point of sales. So the policy will be issued after that. If the client is not approved at point of sales, we're going to have some requirements that need to be met. You'll be able to see the list of those requirements in your advisor center. So after you submit an application, please don't forget to log into your advisor center. When you log in, you will see the list of requirements. Always make sure that everything has been received. When you see that everything has been received, and especially for month end right now, please, you can, if you're running for promotion, for example, you can send us the contract number. If everything has been received, we'll try to work on the case as soon as we can. We can try to ask for a rush decision. Again, we're trying, cannot promise anything, but we're doing our best to make sure that you can also reach your goals for the month. Once everything has been approved, policies can be issued after that. So that can happen. So just remember that can happen because of what we call predictive analytics, which is the feature that's in EVO. We also work on giving the best rate for your client. Yes, every insurance companies, they have their own guidelines in terms of underwriting process and underwriting on how we underwrite your client's application. But at IA, we work with other companies, especially when we cannot give them the best rate with us. We try to look around and shop around for the best possible offer for your client. So if you see a requirement on your list in your advisor center that says facultative reinsurance and it's outstanding, first of all, please note that no action is required. Second, this can take a couple of days, business days, maybe 5 business days, because we want each reinsurer to look at the file and see what's going to be their rate, what's going to be their offer. And based on these offers, we can issue the policy, depends on which one is the best rate. So we're working with 7 different reinsurance companies in order to do so. If you see that, just reassure your client this is in order to try to make the best offer for you. As we understand sometimes waiting, it's not always something that we like. So just reassure them that it is because we're trying to find the best offer for them. If you are submitting any application needs corporately owned, so right now I'm just giving you a few tips on different things to remember when you do business with IE. So this one is for corporately owned policies. First of all, always remember the corporation is going to be the owner, beneficiary, and the payer. The client is only going to be the insured. Now, in terms of additional requirement, just make sure that you indicate on EVO that the owner of the policy or applicant is going to be the corporation, and that will just pre-populate the next questions on EVO on the application. Now, in terms of additional requirements, you're going to have to submit and have these ready at time of sales, different forms. So once you have the application submitted, you can just email these forms to the new business team, which is again, WFG newbusiness@ia.c. So you have a form that's F51-312A form. You also have the money laundering form, and make sure you have the articles of incorporation, all to be completed at time of application. So if we have any form that's missing, you won't be able to complete the underwriting process for your client. So just have these ready in order to avoid any delay. We also have a digital source of information for you that can be really helpful. That's the IA Connected. Please make sure you have your email address subscribed in order to not miss anything, any news from IA. When you go on IE Connected, which is ieconnected.ie.ca, make sure that you go on to the right-hand side. You will see there's a section where you can enter your email address and click on the subscribe button, because that's where that's gonna allow you to receive any news from us. So you're gonna receive alerts when we are launching something new, when we're decreasing our rates, when there is any news from IE, you will receive those information and you will not miss them because you registered your email address, which I think is very important. And as I mentioned earlier, when I started this presentation, I started with what's new. And that was about the rates for the term life insurance that were decreased. And we thought that because the mortgage market is booming as well, why not use and take advantage of that product in order to build a perfect package for the client and make them save money, have something very affordable for their mortgage. Talking about mortgage, that's going to be one of the most important transactions that you will make in your life. And especially right now with the cost of housing, it's going to be a very significant transaction that you're going to make in your life. That's when you buy a property. So when you buy a property, yes, you have it, but it's also very important to protect it, having that mortgage insurance. So with that, we don't really call it mortgage insurance, but it can be used, our products can be used as a mortgage coverage, mortgage protection, I will say. And what I like about our product and our solutions are it can be designed to meet your specific needs for you and for your entire family's financial security. So that's what we're going to talk about today. In Canada, especially, there's going to be a lot of opportunities. So the mortgage market is active everywhere. You also have a number of first-time home buyers that's actually going up every year. And there's a large majority of homeowners that have their insurance through a financial institution instead of insurance company. Why is that? Because people are not everyone knows that they actually have options. When they go get the mortgage with their financial institution, they get talked about having an insurance on that mortgage, but they don't always know that they actually have different options out there that they can choose from. So I think that's why it's really important that we educate families. And that's what we like about WFG. It's not only about selling the product, it's also about educating them, making them understand why is this important. And in order to do so, I think it's important to compare. Look at your different options and then look at why option number one is better than option number two. This is my needs. This is what I already have. And what could I potentially need on top of it? So we're going to compare financial institution and insurance company in this case. Right now, we have financial institution premium increase at the client's age increase. We're comparing the bank versus insurance companies on this slide. This is based on a non-smoker 35-year-old applying for $350,000 of coverage for life insurance. And then this client would like to add a disability rider for $1,000. So because it's only for mortgage, we're going to use a term life insurance, which is maybe 25 years. So T25 will be perfect coverage for this one. You're going to see the blue portion, which is IE. Based on this information, we can offer the client something that will cost them $48 per month. Based on the same information with a different financial institution, the price can vary. And you can see that it doesn't stay the same for the entire life of the protection. Sometimes they have renewals. And when those renewals happen, it's usually based on the client's age as well, which we don't know how much it's going to be. It's not going to stay the same. So the fact that it's not going to stay the same, I think clients, if they still want to keep having that coverage, first of all, they must keep paying for that coverage. And second, they don't have that peace of mind that they already know how much that cost will be in the future. When they know how much that cost is going to be for 25 years, I think that can give the client peace of mind. And I think helping families is also about that. It's about giving the client certain peace of mind. So sometimes it's not only about comparing the premiums, but it's also about different features. What are in a product? I think those are also really important, but you can tell with the bank. It can be $69. Then after 5 years, that would be $91. And then after another 5 years, that would be over $100. If the client want to keep the coverage, because it's very important to protect that big transactions that they made, then they have to keep paying those prices. So I don't think that's really giving the client a peace of mind. Now, in terms of coverage comparison with IE versus the bank, so IE on this one is the red and the bank is the blue one. We can compare the coverage with the bank. First of all, they're only going to cover you for your balance, just the balance. With IE, you choose how much is going to be your protection, how much is your coverage based on your needs. You can see there's something that's decreasing. So in the beginning, we can start at $350,000, and then that will keep decreasing every year. With the bank, it decreases to zero because as you pay your mortgage every month, your balance will be decreasing over the years as well. And that means that your coverage will also decrease because you're only covered for that specific amount. And that's why you see something that's decreasing and that goes to zero. On the other side, with insurance companies, yes, that will be decreasing, but ours don't offer the option to decrease to zero. It's only going to decrease to 50%. So that means that even if you have paid off all your mortgage, at some point you might have a balance of $100,000 that you still need to pay. But because of the coverage that doesn't decrease to zero, but only decrease to 50%, that means that you have at least $175,000 left in your coverage. And if you pass away within those 25 years, you have that amount that's going to be a minimum amount that will go to your beneficiaries and not the same amount of your balance on your mortgage, which is more. So you get more. So I think that's very important. The other thing that we can also talk about is because when you do it with a bank, they only cover you for the balance that you have on your mortgage. So that means that if you still need that coverage, that protection after those 25 years, for example, you have to apply for a separate insurance product. As opposed to with us, you can convert or you can renew it. If you still need that protection, you can renew it. It's going to be on a warranty basis at that time, or you can convert it into a permanent. And what I like about the conversion feature is if you want to convert a term into a permanent, it doesn't have to be 25. It could be any term that you have with IE. When you want to convert a term to permanent, you don't need any evidence of insurability as long as you keep the same amount of coverage. If you decide to increase it, it is possible, but you're going to need to provide another evidence of insurability. So if you don't want to do it non-medical, just keep it the same amount. And which I think can also give the client peace of mind to know that they have that feature, they have the possibility to do that, because we never know how it's going to be your insurability in the future. I might be really healthy today, really easy to insure, I can have the best rate, but what if in the future I want to keep this protection? At least I know I can cover my term coverage without medicals. So even if my health is going to deteriorate over the years, I can have the peace of mind that if I want to keep the coverage or convert the coverage into a permanent life insurance, I can do so without medicals, as long as I keep the same amount. If I feel like I am more insurable, I can still be insured with a great rate, I can still increase my coverage as well. Just to tell you that I can keep it if I need it. With the bank, you cannot keep it once you have paid off your mortgage. You don't have that life insurance and you don't have that protection anymore. You don't have that life insurance anymore. So we're gonna talk about more comparison because I think it's really important to show clients, show families that they have different options. It's not only with the financial institution. It could be with insurance companies as well. And it's important to show them different options, different prices, different features. What values are they looking for in a protection? Are they looking for flexibility? Or are they looking for the possibility to add other type of coverages based on their needs? There are so many situations, but I think it's really important to make different comparison for the client as well, so they can understand why one option is better than the other. So there's more comparison on this slide. With the bank, the financial institution owns the insurance company. The insurance policy. On the other side, with insurance companies, the homeowner is the owner of the insurance policy. I think that's one big point. The other one that we can talk about is in the event of death, the lending institution only reimburses the loan. Yes, they're going to protect your families, your loved ones. They're not going to lose the house because they'll just reimburse it so that can be used to pay off the mortgage. But in the event of death, your beneficiaries or your loved ones actually don't get any cash or anything of a kind. With insurance companies, your beneficiaries will receive the death benefit. And first of all, you get to choose who are going to be your beneficiaries. Then they can decide after what to do with that money. If they have any different project before paying off the mortgage, they can do that. It's completely up to them. But they will have that flexibility. What if they want that some of the amount to help with the funeral, for example, they can have that flexibility. And I think that's really important. We actually protect your families. We're not really protecting ourselves or the lending institution in this case. We're protecting your families, and then they can decide what to do with that death benefit after. If any events, different events happen, such as disability or illness, same thing with the bank. The lending institution reimburses itself. With insurance companies, the benefits are paid directly to the insured. Because when disability happens, critical illness happens, unfortunately, there's so many things that would not stop. Bills do not stop. You still have to pay different things. You're probably going to lose your income at some point because you cannot work. So in order to compensate those losses, you can have a benefit from your disability coverage or critical illness coverage. And it's paid directly to you, which gives you the flexibility to use that amount any way you prefer to use it. We're not going to follow you around if you get diagnosed with critical illness. IA is not going to follow you around and say, hey, I thought you made the claim because you are diagnosed with this illness. You have to show us that you're using the benefit for this specific illness. No, it's not that way. When you submit a claim and it gets approved and you get the payment, if you decide to take a vacation because that's gonna make you feel better, you can decide to do so. It's completely up to you. So you can use that amount anywhere you prefer to use it, which I think is a very big point, because you get that flexibility, you get the peace of mind, and depends on your need, depends on your situation at that time. You can use the money any way you prefer to use it. With the bank, a policy is going to be required for each loan, which can be very overwhelming if you have different type of loans. So if you have a car loan or boat loans or student loan or any other type of loan, and you want a policy, you want an insurance on some specific loans, you're going to need a policy for each loan, which can be overwhelming because you're going to have to keep an eye on different contracts to make sure that you are still covered, everything is still enforced, and that you're still protected. But that can be overwhelming. We're already having a really busy lives right now. Some people are working multiple jobs. We are trying to find a way to make our lives easier. So if we can make it by combining everything under the same policy, because that can definitely make the client's life easier as well. And we can do that with insurance companies. It could be a small feature, but I'm pretty sure so many people can relate. Having multiple things to keep an eye on can be very overwhelming. And when you have something, multiple coverages, multiple solutions covered under the same policy, you just have to keep an eye on that single contract in order to make sure that everything's still good and it's still in force and you're still covered. Policy is underwritten when the claim is submitted, when you do it with the bank. They might ask you a few questions as our application. So when you get with the lending institution, they say, hey, with this amount extra, you can have this coverage. They might ask you a few questions and they will give you the policy. They will issue the policy after. But they don't do the full underwriting at time of application. They do that at time of claim, which unfortunately causes the fact that so many clients are not even eligible to get the protection to begin with, so they won't even be able to get the benefit. However, they've been paying for that benefit for multiple years to then find out that, oh, they were never eligible. I don't think that's called protecting the family. I don't think that's called protecting the client. With us, because of our underwriting, fully underwritten products, that means that we are underwriting at time of issue. So when the client gets the protection, the policy has been issued. The only requirements we need is, okay, in the event of death, we need different proof of death. In the event of critical illness, we just need the client to make sure, we just need to make sure that the condition of the client meets the definition of critical illness. Those are all we need. We don't need to do a full underwriting at time of claim. So I think that can also give the client certain peace of mind. And that's why we were able to pay 99% of the claims that we received. The amount of benefit is established based on the amount of loan with the bank, which can be very limited. So you only cover for that specific amount, nothing extra, and your beneficiaries won't get anything from that. They don't get any cash from the bank should anything happen. With insurance companies, that's why it's very important to do the financial needs analysis with the client to make sure that you have everything covered. You can cover everything under one contract as much as possible. And you have so much flexibility. You can decide how much is going to be your face amount. You can decide if you want to have a level coverage or do you want to have a decreasing coverage, because we do have those features as well. And your coverage ends if the mortgage is transferred to another financial institution if you do it with the bank. With us, the insurance coverage can still continue even if the mortgage is transferred to another lending institution. If you're not happy with financial institution one, you want to take it to a different lending institution. Are you still paying a premium? Yes. Okay, then you're still covered. That's all we need. So now that I've made a different comparison, which products from IA was I talking about? So we call this the IA mortgage package. So we have life insurance, which is a pick a term. We also have disability insurance, which is the disability credit rider. And we have the critical illness insurance as well, which is transition. That's the name of our critical illness product. So we want the life insurance because we want to protect our loved ones so that if the client passes away, there's something for them that they can have. If they want to pay off the mortgage with it, they have the amount. They have the money for that. If they want to use it for a different project in the future or for anything else, they have the amount. So that's PICA term. It's just a traditional life insurance, term life insurance that they can have. You can apply for up to $20 million coverage. We keep increasing those amounts, but right now you can apply for $20 million coverage. If you want a higher amount, it is still possible. It has to be financially justifiable as well, but you might not be able to do it on Evo. You might have to send a special quote to our team that it can be possible. But if you do it on Evo, you can do it up to $20 million of coverage. You can choose any amount of term. That's why the name is called Pick a Term, choosing the amount of term from 10 years to 40 years. So if you meet up with a client, and even if your client is already an existing client and now you just have a chance to talk to them about this other solution, other option, you can actually talk to them. And if they say, oh, I only have 18 years left, well, guess what? With Pick a Term, you can just enter 18 years. It doesn't have to be the traditional 10, 20, 25, 30. It doesn't have to be those numbers. It can be 11, 12, or 18 years, or 27, depends on your needs. So it really gives you so much flexibility. And I also mentioned earlier that you can renew this coverage. So for example, you choose 25 years. So for the first 25 years, your premium is going to be the same for the first 25 years. Of course, as long as you don't make any change to that coverage, your premium is going to stay the same for 25 years, for example. After 25 years, you decided that you need the protection for an additional 3 years because you were not able to pay off the mortgage on time, or you just have like other needs that just came up, and then you want to renew that pick-a-term product. It's going to be done on a warranty basis, which is yearly renewable term. The good thing about this is you don't have to renew it for another 25 years because you got to 25 in the beginning. You can just renew it for another year. And then next year, again, based on your needs, you still need it. Okay, it's going to be another year again. If you need it again for the third year, renew it again. So it's going to be on a yearly basis. And you can decide based on your needs. You can convert it into a permanent insurance. I've mentioned this earlier. Use your conversion. You don't have to submit. You don't need to submit evidence of insurability when you do a conversion, and you keep the same amount or you just decrease the amount. The only time we need an evidence of insurability when you convert is if you increase the coverage or you add another protection as a rider. In those cases, we're going to need another evidence of insurability. Otherwise, just convert it, non-medical, give you the peace of mind, and you're good. The pick-a-term product that we have can be issued on a level death benefit or decrease in death benefit. So level death benefit means that you have the same coverage, and that's going to stay the same for the entire life of the contract. A decrease in death benefit means that contract will start at a specific face amount, say $100,000, and then you take a T25. So that means that $100,000 is gonna decrease every year, and once it reaches 50% of the initial face amount, it then's gonna stay level, but it will never decrease to zero, which means you have protection for 25 years if you decide to do T25. And that's why clients, even if they have a lower amount in their balance, they still have a higher amount of coverage. They can have that with insurance companies. You can have a pick-a-term issued as an individual protection or as a joint coverage. And you can even have pick-a-term as a rider if you wish to apply for permanent coverage on top of it. The permanent coverage is going to be the base coverage, and the pick-a-term and any other possible solutions that the client might need will just be the riders. We also want you to protect your lifestyle, because again, in order to have the quality of life or just have the lifestyle that you have right now, it's because of your income. And sometimes when you're disabled or when you're ill, you're not going to be able to work, and we're going to make sure that you have enough in order to cover and still help you in order to keep the quality of life that you have. We don't want you to get to a point where you have to diminish your quality of life or have to liquidate everything that you have in order to compensate the loss of income. We don't want you to get to that point. And that's why it's important to have what we call living benefits product, and disability coverage is one of them. Something that I want to highlight on this slide is the fact that this disability credit rider is specifically for creditors. It's not for your income. This is not exactly an income protection like a supplementary income rider. This is something for your credits, for your loans. So if you have credit, this is perfect for it. Because remember, when you have a disability coverage, the one that replace your income, those ones can be integrated, and it depends on how much you already get from a different provider or from the government. You could be limited. And when you have a limited amount of disability benefit, we don't know if that's going to be enough. When a client is working, sometimes paycheck to paycheck, living paycheck to paycheck, they already have specific budget, and it could be really limited when they're already healthy. But can you think about when a client is disabled, when there's something that happens to them, there could be additional cost for them to just keep the quality of life that they have. And having this additional protection, disability credit rider that can protect your credits, your loans, this is something that the client can really take advantage of in order to keep the lifestyle that they deserve, that they have, that they were having. So this is specifically for credit. It can be also called creditor insurance, I would say. But this is specifically for a client who has a loan, or even rent also works. But if you don't have any type of loan, unfortunately, this is not going to work. Because you must provide a proof of loan at time of claim. So if you have a mortgage, this is the perfect rider to add to the mortgage package. So you can have a benefit that's payable for 2 years. You can have it payable for 5 years or up to 65 years old. And you can apply for up to $3,500 per month. And this is going to be for disability caused by an illness or an accident. For critical illness insurance, you have different type of coverages depending on your client's need. We have term coverages. So maybe you want to add a term CI to your client's pick a term product to really build a package for them. But if the client says, oh, for critical illness, I think I want to do it permanent because I want to have certain peace of mind, please feel free to have it as a permanent coverage as well. You can also decide if you want to have 25 illnesses covered, or do you want to have 4 illnesses covered only, because sometimes clients will talk about affordability a lot. So permanent coverages, usually that could be more expensive than term, depends on your client's age. So if you want to make it affordable, maybe term is enough for them based on their financial needs analysis, just give them a term product. If they want to talk about more affordability, even more, then instead of giving them 25 illnesses, show them what they can have, how much they can pay with 4 illnesses covered. And I know your client may ask you, why would I choose 4 illnesses when I can have 25 illnesses? There's 21 illnesses difference here, which is right. But just tell the client that the 4 illnesses covered are actually, they already represent 85%, over 85% of the CI claims that we receive. So that's why we have cancer, stroke, heart attack, or coronary surgery that's covered under 4 illness coverage option. We're just gonna make it more affordable. If your client is talking again about having something more affordable, because they always tell you, oh, I cannot afford that. That's one thing that client will say in order for you to stop showing them the coverage. Well, there's another way to make this even more affordable. When you take CI with IA, and it's a term CI, not permanent. The term CI, one, you can choose for illnesses as well, but you can actually decide to have a coverage that will be leveled or decreasing to 50%. Of course, when you do a decreasing to 50% option, that's going to be even more affordable. And really, everyone that's working, I think, needs critical illness, because we want them to be able to have that income replacement, especially when a critical illness happens. So you also have a prevention plus coverage included, which is our built-in feature. I think it's a very generous feature that you can have in a critical illness coverage, is the fact that if the illness, we have 7 of them, if the client is diagnosed with one of the illnesses covered under prevention plus, they can have 15% of the face amount. And even if the client used 15% of the face amount, it'd be 4 times, because prevention plus can be paid up to 4 times for 4 different conditions covered. Even if they used up all the prevention plus benefit, they will never decrease the critical illness coverage. So if the client has used 15% times 4 of their face amount as Prevention Plus, because again, Prevention Plus is for early detection. We can call it that way. It's an early detection benefit that the client can have. Even if the clients use the whole amount for Prevention Plus, they will still be paid for the full amount of critical illness should they get diagnosed with an actual critical illness in the future. So if they're still covered, diagnosed with critical illness, and it meets the definition of critical illness that we have, the client can still get the full amount that they applied for. So that means the client can have more than what they applied for. So I think that gives them a really great and very generous benefit with this product. You can also have a second medical opinion, which is also included. Those are all built-in features. And again, you can have the peace of mind of knowing that the critical illness premium is also going to be leveled and guaranteed. So I know it's not only about life insurance, critical illness, disability. Sometimes a client prefer to add different coverages to their protection. So that's why we have different riders available that they can add. Depending on our client situation, depends on what's going on in their lives at that point. In the future, they can add maybe child module because the client got the policy when they were younger. Now they're older and they have two children. They want to add child module, they can do so. Or they want to add a supplementary income, which is the other disability insurance that we have that actually covers, that actually replace your income. It's called supplementary income rider. They can also add that. So you have additional benefits and rider that you can choose from, which I think it's amazing because again, having everything under one contract is just ideal. So there's going to be some case study that I want to do very quickly. In this case, we have Andrew. He's a sales representative. He wants to buy life insurance and disability coverage because he's buying his first property, $350,000. I think always depends on your client's region, but I think this first scenario is definitely not a client that lives in Toronto. And he's contributing to the RSP. He has passion traveling and he has an annual income of $60,000. We don't want the client to liquidate everything that they have in their savings if anything happens. We don't want the client to diminish their quality of life either. So we want to make sure we're protecting the RSP, that the client instead can still contribute to their RRSPs and that they can still travel. And in that case, let's give them the proper coverage. So we're going to give different options to this client for Andrew. Pick a term, 25 years, decreasing 50%, and disability credit rider. So in this case, we're comparing IA with the bank. So we were able to get $41 with IA, which is going to be a term, and which is going to be a leveled premium. And then with the bank, we have $58, which again, we don't know if it's going to renew. But again, I always recommend, please read your contract when you have it. Option number 2, we're comparing a leveled face amount, which is not available with the bank, but with IA it is available. So we have $49 instead of $41 with IA because now it's leveled coverage. It's a leveled coverage. The option number 3, what if the client wants a critical illness rider on top of it? So with the full package, we can give the client $61. And this one is not available with the bank because with the bank, they don't offer the level face amount because again, they only cover you for whatever balance you have. So in this case, we can show the client all these options. It's not always about affordability because if we're comparing $58 with the bank and then with IA it's $41, $49, $61, okay, for an additional $3, the client can actually have a level pick a term, a decrease, credit disability credit rider, and on top of it, critical illness coverage. So I think you can offer anything to your client, show them the options, and that way they can decide which one can be better for them, and you can help them decide which one can be better for them. So right now, I'm just gonna take it to Evo quickly. We have on Evo, on the left-hand side, you have all the list of the products available. For pick a term, it's gonna be available under traditional insurance. Select pick a term. You can select any of these terms already right here, or you can also enter a different amount of years, completely different. So if you want to do T25, you can either select here or just enter any other term and click on the blue arrow right here. You can enter the client's information, which is always the first thing that I would recommend. John Smith, let's say 32-year-old male, non-smoker, apply. And then you can select the pick a term because you already entered 25 years. I'm going to leave it that way. However, the projection period, because I only want to see for this first 25 years how it's going to be my result. I'm going to change my projection to 25 and the face amount, let's say I'm going to keep it the same. My client probably lives in Quebec, more affordable housing. So I'm going to keep it $350,000. Add a coverage rider. So in this case, let's say I want to add a critical illness, 25 illnesses, maybe 4 illnesses will be enough for me. I want something very affordable for illnesses decreasing and T25. And I also want to add another rider, which is the disability credit rider. Just want it for 2 years. Again, disability credit is only when you have loans or if you have rent. So that's when you need it. If it's only to replace an income, it's not based on income. Sorry, this is not really responding right now. Okay. And then let's say $1,000 per month for the disability credit rider, which gives me $72. But something that I want to have is I want to have a decreasing term. Let's see how much this can give me. $64 for the full coverage. And I have the peace of mind of having the same premium, and I know exactly how much I need to pay today and how much I need to pay for the next 25 years. So you can see it's the same every year. After 25 years, everything will stop unless I decided to renew at that time or to cover, so then you can keep going with the protection. You have the life insurance amount here. You can see it's decreasing. Once it reaches 50% of the initial face amount, which is going to happen after 18 years, on the 19th year, it's going to start staying the same. So 175,000 until the end of the protection. Same thing with the critical illness protection. Start at $100,000 because you decide to do it decreasing. Once it reaches $50,000, then it's going to stay the same until the end of the protection. And the disability credit rider, it's going to be the same coverage for the entire life of the contract. And you can have all 3 solutions under one policy, which makes you save up on policy fees, by the way. So that is for today's presentation. Let me check if we have more questions that were not answered. I'd like to thank you, Anna, for helping with the chat today. If you want to listen to the same presentation, we have a repeat session on Thursday as well as on Friday. Let's see, I'm just looking at the chat currently. Okay, I think there's a question that's specific. I don't know if this is for a specific scenario where the client wants to get a mortgage with a bank to pay their home, and at what point they will buy the insurance policy with ICE. So the insurance policy that we have is actually very flexible. We don't even have to, if they already have the mortgage with the bank, they can just submit an application for life insurance with any riders that they prefer with IE anytime after. Okay. So there's another question here just asking for demo. I'm not sure what you want to, what is the actual inquiry, but if you would like to have some our help with specific cases for your client, please feel free to reach out. And I hope you got our contact information in the beginning of the presentation. And I think that also concludes today's training. Thank you everyone for attending. I hope that helped. I hope that can help you really educate the clients and even your own families out there. You might need it for yourself as well. You can start off with your new client or even with your existing client, because I'm pretty sure so many clients right now don't even know that they actually have options. So that's why it's really important to educate them. So thank you again. And I will see you next time for another webinar. And if you want, again, the same topic want to listen to it, we have a repeat session on Thursday at 10:30 a.m. and Friday at 10:30 a.m. again. Thank you, everyone. Have a wonderful week.